All right. Hey, everyone. Mark here. Thanks for joining me for another Greenbridge Investing Market Analysis. So this is a live stream. If you're new to how this works, please share your symbol or your market into the chat now. So once I complete my portion of the analysis, I can go through the chat and take a look at the charts that you'd like to see. I see some people are sharing it now, so thank you for those. We will definitely take a look. Gabriel and Ricky. Okay, so let's get this thing started. Today, I'm going to be spending some time. First, I want to focus on this Bitcoin consolidation and how to get around this. This type of price action is what separates the wannabes from people who actually know what they're doing. And there are a lot of wannabes out there, okay? So like I've been saying, the consolidations are hard to trade. And there's going to be a lot of false starts and a lot of fake outs. So it's very important to have the right perspective in these situations. Otherwise, you're just going to churn a lot. Okay, so we're going to spend some time on that. Also, I had some questions about some other markets like natural gas and things like that. I'm going to take a quick look at those along with a few altcoins and, of course, the stock market, because the stock market is in an interesting situation and it can be tricky as well. So what I want to deliver here today, or what I want to come across, is basically how to navigate Bitcoin, right, the altcoins, and how to capitalize on the stock market situation without taking outsized risk, right? That's the key thing, risk. Anyway, so let's get started. This is for educational purposes only. For investment advice, please consult the licensed investment advisor. Now, we're going to take a look at the news here first real quick for the week. But before I get into that, I just want to mention one thing. It's important. We have a website. It's called greenbridgeinvesting.com. If you haven't checked it out yet, please do. This is our pricing page. And I want to explain this real quick so that, because we've been getting a lot of interest and a lot of new people signing up. And I just want to make sure that everyone's on the same page and they understand what they're signing up for. So we have the 6-month package, right, for $2.99. And we have Dave's also for $2.99. The 6-month, basically, it's swing trade signals by text, by email. I have to emphasize swing trade signals, right? These are not day trades, so they take some time to play out, and they're not very frequent. Now, we've been sharing, for those of you that have been in the chat room, you know we've been sharing a lot of trades in these recent couple of weeks because there's been a lot of action going on. But just keep in mind, these are not day trades. Some people come to the chat room expecting, charts, trades from like 30-minute charts. That's not what we're doing. All right, so again, swing trades. We also have portfolio management ideas by text, by email. Andrew's been sending out a lot of portfolio ads or trims, basically, building some inventory, getting out of some. That's bigger picture stuff. That can take months, that can take up to a year or longer to see results in that area. So that's long term. Again, that's what we do there. Now, $2.99 a month comes to $50 a month, basically, for 6 months. That's why we ask for the money up front, because it takes some time for these strategies to play out and to really benefit from them. As many of our members have seen, it takes some time. You can't just do it for a couple of days and expect, oh yeah, right, I paid back my tuition or whatever. It's not like that. It takes some time. As Michael recently pointed out, maybe we should extend our free trial period, which is 7 days. But the thing is, we have Trade of the Week. And, if you're a free member, you'll get Trade of the Week, which we send out every Wednesday. And that should give you a good idea of how our trades play out, because it's the same strategy. We just pick a stock and, and then you can paper trade it, or you could see how it plays out. And that should give you a good idea of how our strategy works beyond the 7-day free trial. But the 7-day free trial, you get to come in the chat room and see all the details that we point out. Anyway, I wanted to mention that. Also, the yearly plan is $3.99, right? So that comes to $33.25 a month. That's compared to competitors or similar chat rooms, which the average price is $99 per month. This is a lot lower, and we deliver a lot of value. Okay, so someone recently pointed out to me that they were taking advice, some kind of advice from some agency or something, and of course, if you're taking advice from a Forex broker or a CFD broker, they don't know what they're doing in terms of timing. They just want you to trade because they're on the other side. So if you win, you'll trade more, which is good for them. If you lose, they pocket that loss, so that's good for them also. So they don't care. There's a conflict of interest. They don't care about you or your trades. Their job, the salespeople on the other side of that phone who claim to be experienced, whatever you want to call them, or have some market knowledge, they're just salespeople that have been trained to talk the talk. Okay, so I'm bringing this up because someone pointed out that she was in a position that they got her in. She took a pretty significant loss on the position, and I said, we charge a fraction of that loss for 6 months of membership, and hey, not all our trades work out, but we manage risk very well. I mean, that I can say. And that is something that you will learn, that you can ask our longtime members how their perspective and how their own process and trading routine has changed as a result of spending time with us. Anyway, okay, enough promotion. I'm not a good marketer, so let's get into the analysis today. Thank you all for listening. Yeah, thank you. So let's talk about the news real quick. How long I feel like I've been talking for an hour after all that. Let me see, 6 minutes. Okay, let's move on here. Let's talk about the news. Now, the news is important to keep an eye on. Again, if you're into Forex or CFDs, you should be aware of the events that are scheduled for this week, okay? Because they can cause a surprise and a surprise move out of nowhere. And it's just good to be aware of. So let's see where we are here. ECB president speech, that was what, today? Yeah, that was today. Okay, very early today, Eastern time. And then again, there was another speech, okay? Now the euro had some movement there, but the euro, look, Forex is, for our strategy, Forex has been out of play, hasn't been very good. I see other strategies, they're on smaller time frames. Okay, if you focus on Forex, that's cool. But we have stocks going on, we have stuff going on with Bitcoin and altcoins. There's so much more opportunity and better opportunities than Forex. These things are cyclical. So, we'd rather spend our attention and time on things where the potential is greater. And I can tell you with stocks alone, there's plenty to do. Okay, so that's why it pays, by the way, to not be just involved in Bitcoin and altcoins. I know a lot of people are because they're accessible and this and that, but you really should do yourself a favor and learn how to get involved with stocks or get the broker for stocks. It's the same. The trading strategies are the same, whether it's a swing trade or in a position trade, it's the same. It's just a different instrument, and there's just so much more opportunity. Okay, so anyway, so Japan, what do we have here? Monetary policy meeting minutes, that's not a big deal, okay? Claimant count change for the British pound and their unemployment rate. That's tomorrow at 2 a.m. Eastern time. That's not a big mover. Okay, I don't see any. The big movers that I'm looking for here are things like FOMC meetings, interest rate decisions. Let's see, consumer price index, Australia, nothing. That's not a big deal. On the 27th, we have U.S. durable goods. Again, these are not big market movers. But here we go at 2 p.m. What do we have? Fed's monetary policy statement and Fed interest rate decision, FOMC press conference. Okay, that is important. Now, why? This has the potential to move the market in a big way. I'm talking about the stock market and the U.S. dollar. If there are any surprises in what Chairman Powell says, okay, or whoever, yeah, I guess it's still Chairman Powell. Whatever they say, can move the market in a dramatic way. Usually, going up into this meeting, which is at, 2 p.m. Eastern time? Going up into this meeting, the stock market in particular, like the NASDAQ and the S&P, they get very tight and they get very, everyone just stops, taking positions because they don't want to get caught in any surprises. Okay, so again, something like this, if there are any negative surprises, it can cause a dramatic sell-off, and the market is in a position for such an event. So just something to keep in mind. Now, recent FOMC meetings have been non-events. Okay, there's been no surprises and everything pretty much goes as expected. So just have to be aware of it, that's all. Okay, Germany on the 28th, harmonized index of consumer prices, not a market mover there. None of these, nothing else here are market movers. GDP for the US on the 28th, not a big market mover. And then you have Chinese NBS manufacturing. So none of the rest of these are pretty much non-events. I would just say the Fed rate statement, which is on the 27th, that's the thing that I would just be prepared for, okay? Because it can have an effect on volume, and if there are any surprises, it can have, it can just cause a wide range out of nowhere, okay? And people are like, oh, what was that all about? Well, it could be that. So anyway, just wanted to mention that. Now I'm going to go just scan. I see a lot of stuff coming up in the chat here. So I'm going to get to the chat. All right. So just give me a moment. I just want to run through some of my analysis first. Thank you all for all your questions and everything else. I'm definitely going to get to them, okay, and answer as many as I can. And I appreciate you all being here and everything else. So let's do this. Oh yeah, and by the way, real quick before I get into Bitcoin, if you're new to the channel, please press the like button if you like the video, and also make sure you register for the channel so that every time I stream one of these or we do Talking Markets, you get an email notification from YouTube, okay? And check out greenbridgeinvesting.com while you're at it. If you signed up as a free member, by the way, you do get Trade of the Week, which we send by email to everyone, and we usually send that out by Wednesday. All right, and we decide on the Trade of the Week on the Talking Market show, so you can kind of get an advance notice. Anyway, all right, let's talk about Bitcoin. Now, so Bitcoin's been in this consolidation, right? We've been talking about. I sent out 3 trade ideas during this situation, and basically 2 of them stopped out, right? We took the first one was over here. We took that one and it got stopped out when we had this large bearish candle over here. The second one was an alternate trade idea, which we send that out for people that missed maybe the first one, but alternate means we're not taking it. It means because we were in the other trade, we're not going to add to our risk. So we send out something called an alternate trade, and it says it very clearly on the text. So that's usually for people that missed the first one, and if they're interested in getting in the second one. Both of them stopped out, okay? And that happens. Look, stops save money. They're a good thing. That's the nature of trades, and it's particularly short-term trades like swing trades. If you notice, for our position trades, we don't use stops, right? And there's a reason for that. We use size to manage our risk, which we've talked about many times. Now, the thing with Bitcoin now is we had this push of the 30K area, right? And it went as low as what, 28.8 around there. And that got a lot of people worried. And of course, if you go to the fake gurus and you go to all these websites and all this other nonsense, they're all calling for shorts at such a time. They're all saying, oh, Bitcoin's going to 20K and blah, 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 right? In the chat room and everywhere else, we've been saying in my Trading View reports that I've been writing, this is not bearish, okay? The momentum may be bearish, yes. But yet this is the point that I want to make. You have to zoom out. Forget your 30-minute charts. They're not going to help you for swing trades, okay? If you're looking for day trades, it's a different story. If you don't know the difference, you're better off with the bigger picture, not the smaller picture. But again, people focus on these 30-minute charts, or a guru will put a 30-minute chart on there and then make a prediction for a swing trade magnitude. And the reason why that doesn't work very well is because you're looking for large magnitude rewards, and you're taking risk that's not proportional. So often what will happen is you'll get stopped out, especially if you're on a smaller time frame and you're trying to make big profits, you'll get stopped out a lot because the noise is very high on the smaller time frames. So the stops have to be wider if you're looking for longer time frame type of profits like swing trades. So anyway, let's talk about that. Talked about the 32.5K to 27K area support, right? And so far, price has produced a failed low. It touched the low back here at 30,260 whatever, and it touched it here. Now this, while some people may argue that this is a lower low, they'll say, oh yeah, but it went lower. That's not really a lower low, it's a failed low, because it failed right in the vicinity of that previous low, okay? It's all relative. So this is nothing bearish about this. It's a consolidation. Wave 4, all right? Wave 4s look just like this. And this is a wave 4 of this broader wave 3, which started, when was this the beginning of this wave 3? Back in May, okay? Whatever, March, April low. That's the beginning of the broad wave 3. Now, wave 3 found so far, this dramatic leg that went to 42,000, that's wave 3 of 3, okay? Wave 3s are usually very dramatic and blah, 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 right? Very dramatic, yes, it was. Now, wave 4, this is wave 4 of that 3, which means we still have a wave 5 to go, okay? So wave 5 on that same magnitude should be somewhat proportional to this dramatic wave 3 that we saw, which can take it to 45,000 or even 50,000. It can do that. And wave 5s are often dramatic too. Okay. Thing is, wave 3 cannot be the shortest wave. So wave 5, a lot of times wave 5 will be similar in magnitude to the wave 1 of the structure you're measuring. So that's it from like the Elliott wave perspective, which means Bitcoin's not a short. Okay, so we're expecting that wave 5, but where that wave 5 begins is tricky because this wave 4 consolidation could become a compound consolidation, right? There's no guarantee that it's just going to have like 3 legs and then go. So it may gyrate for a while. There's no way to know. That's why we were very patient with this setup right here. So we had the bounce off support. Okay, cool. We're looking for the inside bar. We got the inside bar, took out the high of the inside bar, which is a long signal, but we didn't call this one. Why not? Because we want to be more patient and see how this plays out. So far, we were right in not calling it. Okay, it would have been in the green for maybe about 1,000 points, but it gave it back. Look, we're back at what was that? 33,269 or whatever. The entry on that long would have been 33.5. So this actually, the swing trade would be in the red right now if we had taken it at the right price. It'd be in the red. And we'd have to hope that, you know, the follow through continues. But if this candle closes right now, if this candle closes with this pin bar type situation, and then it takes out the low of this candle, 32.2, if it takes that out, that's another sell signal. So it's gyrating in this range. There'll be more opportunities to get in. We just have to be patient. What I would like to see right now, for one, is another inside bar develop. Okay, instead of trying to take this one, or we need to take out like a high of like 620, something like that. We take that out, then that may be the signal. Okay, I think I'd be open to taking that, even though it's a little high. That may be the breakout signal, right? Because I'm looking for a continuation of momentum. Once that next leg gets going, this thing should test the 42K high. It should be within reason. Okay, so that's my outlook for Bitcoin. That type of move can take a few days to a week to unfold. So the key things I want you to take away from this is you need to be patient here. Don't get sucked into the hype. Don't believe all the nonsense out there that people are saying. Anything that's in the public view, any type of news, I mean, it's all irrelevant when it comes to price action. And that's something you need to comprehend. I know it goes against human nature. I understand. You know, I used to be like that too at one time, but you must disconnect yourself from that because that is what makes you impulsive. That is what makes you develop this fear of missing out. And what you have to realize is there will be, even if Bitcoin breaks out, okay, and we miss that initial push, there will be other continuation patterns. Yeah, there'll be more aggressive trades, but there'll be plenty of opportunity to get in. And if we miss Bitcoin, there'll be something else somewhere else. Okay, so you can't be controlled by these emotions or these instinctual, intuitive type of feelings. You have to look at the price action and you have to ask questions of the market, and the market needs to prove, the market needs to answer the questions. Okay, and that's where the plan begins to formulate. You don't react to these things. So here's what we have. We know we're at a support. We just need some confirmation and a better setup, and we can take a long again. That's the plan. All right, but we have the trend is on our side and we have the location. All right, so two things on our side. Now, people have been asking about longer term as far as Bitcoin. Hey, where should I add and this and that? If you're buying somewhere in this area, this is a pullback. The key to the long-term situation is you have to split up your investments into small increments. So if you have $1,000, like I've said, and I repeat this a lot, if you have $1,000, you split that up into $100 increments, and you buy $100 worth right here. You're not buying the high. The high was at 40,000 or 42,000. You're buying a pullback, okay? Maybe you bought the earlier pullback and now went slightly lower. Then this would be your second purchase, right? So you had 1,000 to invest. So perhaps you've invested 200 by now. You still have a bunch of money on the table, which you have not invested, and you're averaging into Bitcoin, right? If Bitcoin pushes the 27K area, perhaps you can add another 100. If Bitcoin breaks out higher instead, you add another 100, right? So now you're averaging in, and what protects you in that situation is if Bitcoin has a dramatic sell-off, which again, we have to be open to, anything is possible. If it takes out 27.5K, you can hold off and wait until you make your next investment. If you only have $200 invested at that point and it pulls back to $25,000, what do you care if your $200 is now worth, $150? You're going to be like, oh, big deal, right? And then you say, I'm going to buy more because you're not fully invested with your $1,000. That is what protects you. In not a stop loss when we're talking about inventory, position trading. So anytime Bitcoin touches a support, okay, a major support, like 32K was one, 30K, 27K, those are good places to add to your inventory. Okay, again, as long as your size is pre-calculated and small enough that you can handle a move. If Bitcoin chooses to pull back to 20K, you should have no problem with that. Okay, a mistake that people make is they have 1,000 or they have 10,000 to invest or they have more. They throw it all in at one price, and then when Bitcoin pulls back 20%, they watch their 10,000 become 8,000 or whatever, and then they get scared and they bang it all out, right? So it's going to make you a lot more emotional because at that point you are a weak hand. So in order to prevent that, in order to be a strong hand, you have to break your investment into smaller increments. That is not the swing trade mentality. That is the position trade mentality. It's different. You must keep them separate. Okay, so that's enough about Bitcoin. Now, we had some questions about, let's talk about it. Okay, it's back. Yeah, thanks a lot, Comcast. Okay, anyway. All right, so let's take a look at Ethereum here real quick. All right, because there's been a lot of questions about Ethereum. In fact, I had a question in the free chat room about, hey, Ethereum is pushing its all-time high. What do you think? Look, these things, right? Ethereum still has not broken out on its own. Although it's tried, it's been relatively strong. It's been performing nicely. It's not on its own. So if Ethereum attempts to break out, these are the worst prices to invest and to swing trade. They're the most vulnerable and most risky prices. People celebrate all-time highs. They think that's a good thing. It's a good thing if you're in from low prices and you're distributing to people who don't know any better. Sure, it's a good thing. But it's not a good thing if you're looking to get in, because now you're that person that they're throwing the risk onto, and you don't realize the vulnerable level. Now, look at this pin bar that's developed on here. I would not go near this thing. You have a horrible location, very high risk, and it's giving you a bearish reversal pattern in a failed high situation. If I was a day trader on Ethereum, I'd be looking to short this, okay? But I'm not day trading Ethereum, so let's make that clear. But this is a pattern I would short. If I saw this on the S&P or the NASDAQ, I would short this in 2 seconds. It's aggressive, but this is bearish, okay? Not a bearish trend, but the momentum is turned. So I'd like to see how far this will pull back. So my point is, bad place for investments, bad place for swing trades. Let this thing pull back, especially now that Bitcoin is hesitating on that low. The support for Ethereum right now is this 1030 area, this area right here. That's your support, okay? That's a minor support. That's not even a major one. That's a minor one. So if it takes that out, you could see this 8s, like the mid to high 8s again, and that's really a much more ideal location for investments and swing trades. The minor support around this 1030 area, that's a good location for swing trades, okay? I mean, you could, as long as you keep your inventory small, that's not too bad either. Any pullback is fine for inventory, all right? So again, here's the one key distinction between swing trades and inventory is when you're dealing with inventory, basically you can buy at any price. It's just the higher the price, the smaller, the less you should buy. So if you were to buy some Ethereum up here for inventory and you only had $1,000 to invest, at such a price, you should invest $50. Okay, which is hardly any portion of your, what is that, 5% of your total investment, portfolio, right? 5% of $50 of $1,000. That's all, okay, or less, $25, okay? Because if it's about to pull back, you don't want to have a large weight in there. As it pulls back, you want to add to it, especially if it goes to one of these support levels we talked about. Now, let's talk about DOT real quick, and then I'm going to move on to the stock market. So DOT, I sent out a swing trade on this one on Friday on this breakout because I was anticipating Bitcoin was going to go, and Bitcoin has not. The momentum did not follow through. So now we're getting a similar pin bar on DOT. But here's the thing. Dot is not these coins are not wild movers. Not really. It's in a consolidation right now. So I would hold this until the stop. I don't care if there's a sell signal in there because sell signals do not carry a lot of weight in bullish trends. This trend is bullish. There's no question. So I would try to give this a chance. Okay. If you don't like the idea, of holding, if you're in dot from the price that I sent out, which is, do I have it on this chart here? I don't think I have it on this chart. No. Let me see if I could find it. Hold on a second. Dot. What exchange do I have this on? I think it's Binance. My Binance chart. Is it this one? No, I don't have it. All right. Maybe it's on Coinbase. Hold on. I think it's on my Coinbase chart. Where's Coinbase? Coinbase. Where's Coinbase? I don't see it. Do I have the right Coinbase? Or maybe it's Bitfinex? No, I don't think it's Bitfinex. Oh, yeah, there it is. Okay, got it. Hold on. So this is my dot chart, and that's the chart. That's the trade that I sent out, 18 and a quarter. Okay. So here's my point about dot. Right. If you don't like the stop, if you don't like taking a stop at $14, if you don't like that idea, then there is a sell signal basically developing. If you want to take a smaller loss, that's up to you. Okay. You don't have to hold it to the full loss. Get out, and you can always get back in. It's right now you're basically losing less than $1 if you exit now. You do have the failed high, and Ethereum's not in a great position and all that stuff. But if the sell signal doesn't go very far, you have to be prepared to get back in. That's the thing. That's why I have the stop defined. It's like, let the market do all the work. Don't try to second guess these things. That's how I go about it. If it stops out, hey, the market's just doing you a favor. Okay, it's saving you money, because at the same time, if it never makes it to that stop and turns around, you're still in, and it can do it while you're sleeping. All right. So anyway, all right. So that's dot. Now I know I'm talking too much about these things. Let's move on here. I'm going to get to your questions here in a moment. So just be patient. Let's take a look at the stock market real quick. NSX USD, because this is an interesting situation today. So look at this outside bar that developed. All right, so there was some news about California earlier, some nonsense news or whatever, and the NASDAQ sold off like 300 points in a matter of minutes, right? This thing, the NASDAQ high today was 13.5, and within minutes, it was at like 13.1 or whatever. That's a lot. Look at today's low, right? Today's low is 13.2, okay? So that kind of, this market, they're going to pounce on this market when things line up. They're going to pounce. Now, what I want to say about this is there's been a lot of talk about a dramatic sell-off coming. Okay, everyone is saying there's going to be a big sell-off. There's going to be a big sell-off, right? Experts are coming out. There's going to be a big sell-off. When it's a public knowledge that there's going to be a big sell-off, it's probably not going to happen when they're saying it, because often a sell-off is unexpected. Okay, so something to keep in mind. What that does is it invites a lot of shorts, right? Oh, yeah, all right, it's going to sell off. I'm going to buy puts. I'm going to get short. I'm going to do this. I'm going to do that. And all they do is squeeze them out, okay? This thing at 13.5, I'm sure squeezed a lot of people out, because we closed at 13.3 on Friday, or 13, what was the close here? Yeah, 13.368. So again, now we took a short position. I sent out a short position on Friday, but we have a short position that's protected. Now, what I mean by that is UVXY. UVXY is the ultra, the ProShares Ultra VIX. Okay, this thing benefits from a spike in the VIX, and the VIX will spike if the market sells off. Now, look, the market didn't even sell off today, and this thing is up 80 cents. So if we're wrong, okay, if we're wrong about the sell-off, we just lose the premium that we paid for the calls that we bought, okay? And we didn't, I only spent, what, $160 per contract or something like that? So that's my maximum risk per contract. So if this market wants to keep going higher and higher and higher, they're not squeezing me out, because my risk is defined and it doesn't matter. And I have plenty of time. So if this market doesn't sell off in a couple of weeks, I can roll over my options to the following, the following month, which will probably be June at that point, right? Because I'm in the March options. Anyway, the point is the options protect me from this thing keep going, so I won't get shaken out, number one. Number two, this type of outside bar is not a good thing to see at a high, at a market high. That's usually signifies a change, okay? So just something to keep in mind there. If we take out this low, which is what, 13.2 basically, over the next few days, we may see, you know, that could be the beginning of the sell-off, right? But we have to see. Now, here's another thing, another point that I want to make about this is for people that trade stocks. Now, we've been calling longs in stocks. I like BLNK. I like this one. Blink, look at this, right? So a lot of stocks had pops today and they gave it back. All right, no problem. But this is a potential swing trade long. We'll see about that. But the point is, you don't have to stop just because a short may be developing. It doesn't mean we have to ignore long signals in stocks. CGC is pulling back a little bit here, but still looking for the higher low there. There's certain stocks, right? Nikola, here's another one. They all had this little pop today. The point is, there will be opportunities in the stock market anyway, okay? And let me see, there was another one I wanted to point out. I can't remember it right now. But there's going to be opportunities anyway. And we don't have to ignore them because not all stocks are 100% correlated to the S&P and NASDAQ, right? Usually the biotech stocks do their own thing a lot of times. And that's a big contrast compared to something like Bitcoin and like the altcoins. Usually the altcoins don't do their own thing. They rely on Bitcoin. Where stocks, you have many that do their own thing. And that's a good thing because that you could rely on chart patterns because the chart patterns will be, they'll be more reliable because they're a reflection of what the investors are doing. Okay, so if they're preparing to buy something, if they're piling in something that's about to break out, hey, that's what we're interested in, right? Look, NEO, look at this, right? NEO tried something like that with the higher low. This is not a great formation right now for NEO, but these are the stocks that are on our radar. Okay, how's Tesla doing? It's usually the leader of the electric vehicle stocks. Tesla pushed that high today. Looks like it kind of gave back a bit there, but this is still pretty strong. I wouldn't consider this a failed high just yet. We have to see how that closes. All right, anyway, so you get my point. This is why it really pays to get involved in stocks and not be isolated just to altcoins and Bitcoin because, again, like I said, they're cyclical, and there will come a point where the altcoins turn back to garbage, okay? Just like they were garbage for 2 years following the 2017 peak. Many of you probably don't remember that, but most of them are out of play, and they were horrible to trade. So now, instead of getting caught up in that nonsense, you should be prepared to rotate into where the money flows next. Maybe it's Forex. I don't know. But there's plenty of stocks to get involved in. All right. And that's why, you know, we used to run a different website that just focused on altcoins and Bitcoin, but we were trading stocks. It's like, well, we're misleading if we're just going to focus on, you know, just Bitcoin or whatever. We want people to be able to capitalize on these other opportunities as well. So that's why we look at everything. All right. Anyway, so that's the stock market portion. Real quick, I saw a comment on gold. Let's take a look at gold. Gold, this is what a broad wave 4 consolidation can look like. And I keep bringing up this example, and I know it's not pleasant and it's not something that's exciting and fun or offers much promise. But gold went from that 2000 whatever August peak to 1764 in December. That took 3 months. Bitcoin can do something similar. Okay. So if it does something like that, it's not going to be fun to trade, and there's going to be a lot of stop outs. You need to be prepared for that type of scenario. I'm not making a prediction, but you have to be prepared for how the market behavior changes and what's within reason and what's not. In these range-bound situations, right, what's usually a good thing to do is tighten your profit expectations, tighten your targets, and obviously be more selective with your entries, right? Don't just take any breakout. You have to, really have to wait for things to line up. Now, as far as gold goes, it found this double bottom area right here, this failed low situation, and it's been tricky, but, and someone said, I think it was Ricky mentioned that he was losing his patience with gold, but here's the thing. Gold is not out of its range yet, but it may be developing a higher low right here. That's good. And if the best way to get involved in gold is with mining stocks anyway, the CFD and the futures and all that stuff, the paper gold is a real pain to trade because it's very easily manipulated. All right. But if this higher low develops, I think we get another leg higher. The thing with gold is fundamentally, there's a lot of reasons for gold to be going higher. And if you talk to Andrew, who's a gold expert here, he's a gold dealer. He's been talking to his gold people friends, his gold dealer friends, and there's a shortage of gold. That they can't get physical gold, right? So they're paying these ridiculously high premiums because they can't get any gold, right? So what do you think that means for the price eventually? And people may say, well, why isn't it going up now if people know this? Because this is manipulated, okay? And they can easily shake people out of paper gold. But that fundamental situation going on with gold will catch up, and the price will go vertical. It'll spike. So if you want to get involved in gold, like I said, gold stocks, Wheaton Precious Metals, WPM, right? That's a decent stock. Look how it's fooling around. Plenty of opportunity to start building some inventory in something like this, right? Newmont Mining, another one, right? GDX, which is a gold miner ETF. They all look the same, okay? But they're not pushing highs. This is a good time to accumulate some. But again, you have to have that inventory strategy. You don't just pile into it. When gold starts pushing 2,000 again, you're going to see these, start pushing their highs, and that's when everyone's going to think it's safe. And that's when everyone's going to want to buy. That is not the time to be buying gold, okay? So I just wanted to mention that. Now is the time when it's not really on everyone's radar. It's hard. No one's talking about it. It sucks. Everyone's bearish, whatever it is. You want it when it's not making highs. All right, so that's that. I know I've been talking a lot. Let's get into the chat here. Oh man, 40 minutes almost. Okay, so I just mentioned gold. So Ricky, zoom, work, and run. Let's take a look. So ZM, all right, so I'm going to try to get through as much of this chat as I can. So Zoom has this higher low developing right here off of this old resistance, new support. This is it's been a difficult stock to trade. As you can see, we had a trade in this stock, which this was a trade of the week. I think it got stopped out. Stop loss was 370. Yeah, this thing I believe got stopped out. I think we called it back here somewhere, or maybe it was back. It was maybe back here. Either way, you have to. If you like this situation, you do have this broad consolidation. It looks like you have this push, this initial push right here, which is a good sign, right? This is good off this double bottom, right? This is all right here. This is the reversal process from this to this. That's good. So you have the higher low. The question you have to ask yourself is how much you're willing to risk, right? The market says 372 is the reference point for risk. And this thing right now is at 389. So if you buy this thing around now, or if you wait for the breakout of 399, or basically 400, you're looking at about 30 points of risk, right? Which maybe sounds like a lot, but you have to compensate. You have to take a smaller position. So 30 points of risk to try to make about, I'd say you could make, more than 30 points. If this thing pushes to the next resistance of, what is that, 484, which is within reason, it's worth the reward risk if you like this type of stock. Okay, again, this is, some people may say $400, I can't afford a $400 stock, but you could buy 5 shares or 1 share. It doesn't matter, right? You could still participate in some way. You're just not going to be able to, it runs 100 points on 1 share, you have $100. I mean, what's wrong with that? So I like it. It's not bad. I just try to look for stocks that are less expensive, because there tends to be more of that herd mentality or that day trader reaction that piles into them, and you get those vertical moves. But again, you have the setup. You have the higher low. I would just wait. The current candle, there's nothing special about this current candle. You took out this pin bar high from the other day at 386. Basically, the high 386 is there. So I would say you have a long signal in play. You just have to figure out, you put your stop near that low or slightly lower than that low, and at that point, hope for the best. I mean, this thing has been obviously affected by, the whole stay-at-home workforce thing. Okay, so that's Zoom. Okay, work. This is Slack Technologies. Obviously, when I see something like this, I don't know if that's earnings. This looks to me like a buyout situation, right? When it does something like this, I don't know what the news is on that, but I would not touch it now. Not with this. Usually, if it's like a buyout type of situation or some kind of stock deal or something, you'll get that vertical move, and then it stays at the price or whatever the deal was, right? That's what this looks like. This is out of play. I would leave it alone. Okay, so leave slack alone. There's nothing to do there. Okay, it needs to pull back to a more significant level, and that would be 33. And let's see, run. So you're talking about sun run. We had a nice trade on sun run, as you can see here. But this is a good example of a trade that took some time to play out. I called this thing back in, I think it was October. It was around here somewhere. Here, I'm going to point it out. It was around this area, something like that around here. And this is a good example as to why our membership, while it really pays to stick around for a few months and not just 1 month, is because look how long this took to play out. All right, I remember, and I remember Michael had a question about this. The buy stop was at 59.50, right? And this thing ran to like 69 or whatever. And I think it just missed its first target, right? 69.42. First target was 69.50, and the thing pulled back, right? And I remember Michael asking me, "What should we do with this? Is it still worth to enter?" Because it went all the way back to the entry price. And I said, "Yeah, you know what? And I'm going to hold on to it because I put that stop in there at 51.50. I put the stop in, and I'm going to leave it up to the market. Okay, so either it stops me out or it does its job. Eventually, this thing did its job, okay? But this trade, if you look from like the entry time, right, early November, the trade didn't work out until the beginning of, what, January? First week of January. So that was like a month and a half, almost 2 months. That's a swing trade. So it worked out nice. Anyway, look where it is now. Ugly candle today, okay? Good location, decent location, right? Potential double bottom, right, or failed low. But that candle, there's no reason to buy into that candle, okay? It just have a red candle. There's no tail, there's no pin bar, there's nothing, no inside bar. Leave it alone. You have a lower high here also. So this thing needs to stabilize, okay? You got a lower high right there. And the support that I'd be looking for on this thing is, what is this, 69.5, okay? So if this thing could pull back into that 69.5 or low 70s, that would be a much better level to start watching for a new long. Okay. Also, that coincides with, actually, you took out the October high. So I'd be watching for that area here, those high 60s, low 70s, for a reversal on sun run. But definitely on the radar. Thanks for bringing that up. Okay, let me move along. Hey, Gabriel, good to see you. YFDFI. Is that the whole symbol? So let's see, YF. Looks like YFI USD. I guess that must be the symbol, right? Let me type that in again. YFI against Tether. Yeah, on Binance. So let's take a look at that. YFI. Let's look back. So first thing, so again, for those of you that may be watching me for the first time, I have a process, right? In my process, whether I'm swing trading or position trading, I start out the analysis. By the way, analysis is separate from trading. And many of you may not realize that, but there are two different, I should say, processes. Analysis is not to be mixed with trading. Trading is really all about risk management and making decisions based on changing information. Analysis is you're putting your plan together. So when I do my analysis, I'm looking for three things, right? Trend, levels, and then price action. So as far as trend goes on YFI, I mean, from November, you have like a higher low over here. So you have a bullish configuration, but overall, right, you haven't taken out this peak, right, that dates back to like early October or whatever. So bigger picture, we can argue that this thing's in a range. Smaller picture, we can argue that it's in a bullish trend, okay? That's based on that structure. Now, more recently, though, you have a double top and a potential failed high, or lower high, I should say, okay? And you have this ugly candle that's developing right now. So I would say that this thing is I would still characterize it as generally strong, but recent price action says you probably can get better prices. So I'd be looking for supports, and I'd be looking for reversal structures, reversal type of price action at support levels, okay? So the support levels you have, is this the right thing here? Let's see, YFI, 18,000, okay, so 18,000, whatever that is. 18,655. What? Hold on. 565. Okay. That would be one support. That sounds like a ridiculous number. The other one here is 26,587. Okay. This support here, which it bounced off of recently. So I'd be looking for, as far as a swing trade goes, those are the levels I'd be watching for first. At the moment, like I said, you have a bearish candle, and it's on the low of that candle, and looks like you took out the previous day's low. So I would let that bearish momentum play out and wait for stability. Okay. So overall, I'd be looking for longs. We don't short these things, by the way. We don't short altcoins. We don't short Bitcoin. You don't have to play both sides of the market to generate a return. Okay, Gabriel, LINA. So let's see, Lina USDT. Oh, there we go. Something vertical. Linear finance. Interesting. So let's see here. So you have this is no question trend bullish. Okay. Momentum is bullish. Levels. You have support right here at basically basically 1.2 cents, or about 2 cents. No, about 2 cents. Or at the high, yeah, 2 cents. I'd just say you have to round these things to whole numbers. So you have support around here, and you have another support around here, which is, what is that? Almost 3 cents, right? The high twos, you have support around here. Those are the areas I'd be looking for. I would not buy this thing at the herd mentality high. Can this thing go higher? Yeah, right? The momentum is bullish, but you're taking a lot of risk. This is certainly not the kind of coin that you just throw, $1,000 or a few $1,000s in at these prices. And, oh yeah, it's going to keep going. It'll be at, $1 soon. You can't do that with these. It might not. It's a lottery ticket, right? So let the chart tell you what to do. It's bullish, so you're looking for supports. Wait for that 3 cent area or those high twos and see if you can get stability there before buying some. I mean, I definitely keep this one on the radar. I like it. I see it's on Huobi. Is it, let me see, Lina, is it on any exchange that makes sense? So just Huobi. Yeah, I don't like coins that are on these not so popular. I know Huobi's a big exchange and all that stuff, but if it's not on Coinbase or Binance, for one, U.S. customers can't even use Huobi. You have to jump through a bunch of hoops if you do want to use it. Most people aren't going to. So anyway, but strong. It's definitely strong. Wait for a pullback. Okay. If you want to buy some here, I would say very small. Don't play any games with that. Okay. Thanks for bringing that one up though. I definitely want to keep an eye on this one. At least to mention to people if they are on the Huobi exchange. Can you look at WWR? Sure, Abhishek, sure. So this is a swing trade that I had called out a week ago, right? Earlier or sometime over the previous week. And I was betting on the pop, right? The big pop. And it tried, okay? It's been trying. The momentum hasn't kicked in yet. So what do I think of this thing right now? Well, there's nothing to do here. Look at this current price action. It's just kind of gyrating around. See this? We're getting like these pin bars. I wouldn't call this bullish or bearish. It's just pretty much neutral. It's trying to break out of this. It's trying to take out this high right here. What is that? 7.5. I would give it a chance to do it. Okay, because first of all, if you look at these lows that it made, what is this? 585. This is as long as it keeps that 585, as long as it does not compromise it, that would be a higher low. And wherever you have a higher low, often it's followed by a higher high. So I would be waiting for that. What I liked about Westwater Resources is it's a herd mentality stock, and the herd hasn't piled in yet. As you could saw, we just took a look at that Lina. That's a herd mentality situation, right? This is what I'd expect to look like, I would expect this to look like Lina soon, or just like it was back in early October. I'm looking for that herd mentality to pile in. It's trying, but it hasn't piled in yet. Once it piles in, I'm looking to get out, okay? So I would hold on to this and give it that chance. Now, the thing with WWR is just let the market do its job. If this thing takes out the stop, it's out. right? That's the way I'm going to play it. I'm not going to second guess it. It's up to the market. All right, so thanks for bringing that one up. Hey, Reggie, take a look at RSR, okay? RSR. I like these altcoins that I'm not familiar with. RSR USDT. Looks like it's on Binance. So let's see the story here, RSR. Now, all right, so again, we begin with trend. Trend is bullish. Didn't take me long to figure that out, right? I see higher lows, I see higher highs. That's a good sign. Next, I want to see levels. You have a support right there at 2.5 cents. Then there's another support right here at basically 3, just in the low 3-cent area, around 3 cent, 3.14, right, around there. Current price action, you have this range bound situation, right, with this double top that developed here at 5 cents, just in those high 4s, 5-cent area. So I would hold off. You're right in the middle of the range here, and it looks like a sell signal is developing, which is not surprising based on where Bitcoin is and all that stuff. So just like those other ones that we looked at, like Lena and YF, let this thing go back to supports, right? That's for a swing trade. That's what makes the most sense. Let it test the support. If you get the reversal at the support, that's when you can define your risk, and that's when the probability is greatest in your favor. What if it takes out the support, right, and goes to the lower one? Well, you should be prepared for that one too, right? That's a potential scenario. That's how a trading plan comes together. You know your levels, you know the trend. You just need price action to confirm, and you need to be able to define your risk. Once you can put all that together, you're at least aligning things that are favorable to you, okay? As a retail trader, the only thing we have, really, the only advantage that we have is trend. We don't have any other advantage. So we really need to understand how trends work and how to capitalize on the herd mentality when they're getting it wrong, right? Because that's who takes the other side of your trade. Okay, so thanks for bringing that one up. XOM, is that an altcoin too? Let's see, XOM, or is that a stock? Or is that, it's Exxon. Okay, so let's take a look. Now, clearly bullish, right? Look at the November low. I think that was the oil energy sector low. Anyway, Exxon got beat up, right? This is a great example of a good stock that got beat up for just dumb reasons, right? Irrational. So at this point, let's see, Abhishek, this is a great one that you bring up here, because not only do you have the recent bullish structure, you have a support here at 44.25, basically, right? Doesn't have to be exact. And you have a higher low that's developing right now with this pin bar. Beautiful. I like that. So this would be a good candidate for a swing trade long. Look at this pin bar. What time is it? Okay, so the market closed, right? So this pin bar is now it's there, it's established. The high of the pin bar is 47.05. So a break of that tomorrow, you figure 47, give it a little room, 47.25, something like that would be an entry. Your stop would be defined by the pin bar low, 46.17. You figure 46 even, maybe slightly lower. And your targets should begin, let's see, how much money is that? 47.05 to 46. You see, you look at about $1, I'd say $1.25 of risk, which isn't bad, right? To try to make your first $1.25. Let's see, you're looking at, the first resistance on here is about $2 or $3 away. So the reward risk makes sense for sure. Okay, I like it, and plus it's a good stock. Right, it's a high quality stock. This is not cannabis. So nice setup. You have everything lined up there. I like it. This is a good candidate. Okay, I may even call this one tomorrow. Okay, this is a good one for my radar. So ExxonMobil, thanks for bringing that one up. I like it. Okay, let's see what else we got. Abhishek, Stephen, you send an options trade. Is there a video where you explain how to trade options, or maybe how to... Okay, so Stephen, great question. If you go to our webinar library, I believe you remember, if you go to our website and you go to our webinar library, we have 3 webinars that we did on options. Okay, back in March of 2020, there was a webinar back then. I believe we did one sometime after that. Perhaps it was May or June. I can't remember. You have to look at the webinar library. And then in August, I put a webinar together where I showed people how to place the orders on a particular platform where you can paper trade options. So yeah, so there's basically 3 webinars I believe you can check out that go over how we trade options. So thank you for bringing it up. The options trade that I mentioned was UVXY. So if you want to, before you trade options, and Steve is doing a good thing by asking that question, you really should be familiar, right? Michael took advantage of the paper trading platform that I featured in that webinar, and he got comfortable with how the options trade. You really need to do that because they have different behaviors and there's different variables that you have to keep in mind with options. Very common mistake that people make with options, first thing, is they look for the cheapest options, right, to buy 1 month out, and those are the worst possible options you can get because the time value is so against you, right? So you have to understand what you're getting into with them. So anyway, we cover all that stuff in those videos. Thank you for bringing that one up. Okay, so Abhishek, Exxon energy sector, right? Oh, so for Abhishek, as far as ExxonMobil for long term, because what I just described here is short term, right? A swing trade. Long term, this isn't the greatest level for long term because there's more risk, right? It's not a long term level. If you want to buy some as a swing trade, right, and the swing trade works out, and then you lock some of that profit in, and then you want to hold on to some of that to see if it goes further, okay, fine. You know why? You locked in some profit at that point, your risk is lower, and you're in a good stock. So you can try playing that game with it, but as far as long-term levels for inventory, I would wait for like a 44 and a quarter or something like that. I mean, you have another support here around 41. It's hard to believe that it would go back there, but anything is possible. So that's the way I would organize those 2 strategies, if that makes sense. Okay? So good question. Man, I talk too much. All right, I'm just checking the time here. So let me see here. Abhishek. All right. Hey, HS, good to see you. Gabriel, can we look at ETH XBT? So Ethereum in terms of XBT. Oh wait, what is that? Is that let's see here. So well look, so this situation, it's going to be similar to Ethereum. I mean, I don't like these cross altcoins. I really don't. I like them against the dollar or something that's predictable and that makes sense, much more predictable. These cross pairs, they're like Forex cross pairs, and they can act in strange ways. So this situation, this looks like DOT. It looks very similar to kind of like been doing. You have the higher high, okay? You have the higher high that took out this high here, but as you can see, it's failing in that area, which qualifies to me as a failed high. If this is the case, this is a bad place to buy it, okay? I'd be looking for supports on something like this. Look for supports, right? Your first support is over here, which was what, 03, what is that number? 0355, right? I'd be looking for that support there. Or you have an old resistance over here at 0338, around this area. That's the places, if you're looking to buy this thing, those would be the first places I'd be looking, not where it is now, okay? Especially since it looks like it's still in pullback mode. Okay, so thank you for bringing that up. All right, let me see what else we got here. Stephen, I might not be able to keep up. Oh, wow. Oh, man. All right, Stephen, no problem. Well, hopefully I answered your question there. Hey, Kamal, nice to see you. Thanks for joining. Nicholas, hey, good to see you. All right. I know, Nicholas, you had a question about reefer, I'm going to get to that. I remembered. So let's see. Jay, I was just looking. Oh, sorry, Jay. Okay, Mo, the membership is worth. Oh, thank you. Okay, this is from like an hour ago. Hey, Nicholas. Okay, are the prices going to stay the same for the people that subscribed to Greenbridge before? Well, Nicholas, I'm not sure if you were subscribed previously and then you canceled your membership, and then we changed our prices. You know, there was a lot of opportunity to keep your prices the same by not canceling the previous membership. I mean, I must have repeated that 10,000 times back in November and in December when we changed our prices. So, yeah, I'm not sure what to tell you there. What you can do is you can try emailing Andrew, and maybe he'll help you out with that. But we spent a lot of time letting people know, and a lot of people who stayed on, they got our lower prices. So anyway, good question. Scott, would you be great if you could have a look at Yeti and AAG? Okay, on the LSE. Okay, so London Stock Exchange, Yeti. All right, so hold on. So I have Nicholas's question. And before I move on, I know, Nicholas, you had that question about reefer. Let me just do the reefer real quick. So reefer, wow, look at that. It's at 489, okay? Nice move. So I know Nicholas has been in this for a little while, and he's in from really low prices. And his question has been, what do you do with this? How do you trail this? What do you do with this? Well, when you're trailing something, okay, we talk about trailing stops a lot. You have to do it manually. And what I like to do is I like to go 2 bars back from the highest high. This is the highest high in the move right now, this current candle, which 512 is the highest high, right? So you go 1 bar back, which is here, 416, and you go 2 bars back, which is here, 414. Not much of a difference, okay? But I would trail the stop right there. Now, so what does that do? That allows the market to continue higher, right? And let the market do its job. And once if the market makes a higher high, so tomorrow, if you see this, now, right, then bar 1 would be the current candle, and bar 2 would be this red candle back here, and your stop would not change, okay? It would stay there. Now, if the next day you get a higher high, okay, now your stop changes to this candle right here, right? So your stop would be it would go from 416 to basically the 450 area. It would go here. Now, like I said, you're letting the market work, okay? That technique will not get you the high. Now, people get upset because the market may, what if this thing runs to like $8 and then one candle gives it all back and stops you out at your low stop? You're like, oh man, I could have had an extra $4 and I didn't take any off the table, right? So there's no way you're going to get the high. So what you have to do is you do a mixture of targets and trailing stops. So if you have, let's say you want to split your position into 2 parts, okay? So let's say you have 100 shares, and you could put 50 shares for sale at a target, and use some ridiculous target. Say, you know what? I would love for them to take it off my hands at $8. I don't know if it'll make it up there, but what the hell? Why not? I'll just put it there, okay? And you put it so you put 50 shares for sale way up there, and then the other 50 shares you're trailing. So if the market has a wild move and touches your $8 target, great, you're out of 50 shares at a potential high. You may have just gotten the peak. That's how you get the high. But the thing is, trying to get the high consistently is just a gambling game. You're not going to get the high. And people get upset when they leave money on the table. Leaving money on the table is part of the game. You have to be happy that the fact that you extracted a profit for taking a risk. Doesn't matter how much profit, okay? As long as you're making more than what you risked, that is the only thing you should hope to accomplish in this game, right? But people want home runs. I understand. It's human nature. But that's why most people don't make money in this game. Now, the other 50 shares, you keep trailing until it taps you out. So if it struggles to make that higher high and your low happens to be around 480 or whatever, and then you have that pullback, taps you out, hey, who cares, right? You locked in some near the high and it knocked you out at your trailing stop, and you gave the market a chance. What if this thing runs to $10 and you keep trailing, right? You have the chance to continue to ride that if the market chooses to do that. That's the benefit to a trailing stop. Okay, so anyway, I wanted to mention that. I hope that clears up your question about managing that position. Okay, Scott. So Yeti, YETI. All right, so I'm guessing that's a stock, Yeti Holdings. Okay, bullish, right? Trend is bullish, no question there. It's pretty easy to see. Let's look at levels. So you have a support over here at 54.25. Basically, I like to use round numbers, even though it says 54.34. I just go right to the round number. 62.25 basically is another support, and then you have another support right here at 67.70 area. Okay, and the market made this higher high. Okay, this higher high right here, and it pulled back a bit. Right, tried to bounce, and now it's having a little hesitation. right? This is not a great spot to be buying if you're looking to buy. You're sort of in the middle of a range here. I would rather wait. I mean, this thing closed at 70. You can probably wait for a test of that 67 area, okay? Or perhaps it pulls back lower. But 67 area may mean in the like the 65s, high 65s. You may get a failed low. That would be ideal if you can get something in that area there, because you'll have a lot of people banging it out thinking that the trend is bearish, but the trend is not bearish. Okay, same thing like with the Bitcoin, same type of thing. People banging it out, getting short, and they're shorting right into a bullish trend. So I like these locations, right? The mid 60s compared to where it is now, but the trend is bullish. So I would hold off on that and wait for something like that. For the double bottom, another way to look at this too is if you take out this high right here, 72.65, you take that out, that would be a breakout. It's a little riskier because you're going against this resistance right here. But if it's going to go for the higher high, you want to try to take that breakout, just compensate with smaller size. Again, I'm talking about swing trades here, just to be clear. I'm not talking about investments, okay, on this particular chart. All right, so thanks for Yeti, Scott. AGM. Oh, wait, hold on. You said the London Stock Exchange, right? So I probably have the wrong one then. Let me see if the chart is similar. Hold on a second, because I'm looking at the, let me find the London Stock Exchange. Why don't I see the London Stock Exchange here? I see the German Stock Exchange. I see this other one here. It must be the Italian one. Why don't I see that? Okay. I think I got your, oh, maybe just AGM. Let me go to AGM. AGM. Oh, LSE. There we go. Okay. So applied graphene. All right. So this is probably similar to like PLL, I'm guessing. One of those like lithium type things. I'm guessing. I don't know. Nice trend. Higher highs, higher lows. Okay, great. Not a good location now. This is a bad spot. All right? It's risky. It may try to go for that higher high. It may not. Right? I'd rather not take the risk. I'd rather wait for a support. Your first support is right there at 53.40. Your second support is at 48. Around that, maybe in those high, maybe mid to high 40s. I'd say this area here, right? That's your second support. I would rather wait for one of those supports than buying it here. Okay, this is a lot riskier. It may go for the higher high, but what if it fails? Right? Is it worth taking the risk? So in this situation, I'd rather wait. There are better setups out there. Okay, so thank you for bringing that one up. I have to move a little faster now. AGM looks like a lovely cup and handle range. Right, it is, and it is a nice lovely cup and handle. You definitely have that situation. I would just wait for better levels. It's bullish, okay? There's nothing bearish about this. I just think you could get better levels. And there are better setups out there in other stocks. So thank you for bringing that up. Visa. Oh, look at that. So Visa, I was watching this one. You brought this one up the week before. Look at that pin bar. That's nice. That's a pin bar right there. So Visa's been range bound, basically, right? It hasn't really, the general trend is bullish, but more recently it's been like range bound, okay? And the thing with that pin bar, I love the pin bar, no question. I'm just not crazy about the location. It's not a horrible location. You do have some support dating back to this range in July, like right around there. You do have some support there. So the pin bar makes sense. I mean, if you like the stock, hey, it's worth a try. It's not like it's a garbage stock or anything. What's the high of the pin bar? Let's see what the risk is. 201 is the high of the pin bar, right? 201.5. So you figure 202 is going to be your entry. You have to give it a little room, right? And the low is 195. So you're looking at about 7 points of risk, okay? 7 points. And what is a potential reward? Can this thing push 7 points? That would put you at 209. That would actually put you around here, right in the middle of the range there. Yeah, that's a 1-to-1 right there. So it looks like it's within reason. It can do that. So yeah, it's not a bad idea. But I would look at this as 1-to-1. I wouldn't sit there and expect these highs, although it's possible. You have to look at what's more probable, and 1-to-1, which is right around here, would be more probable. Okay, so I'd be looking for something like that on this because you do have a decent location and you have a setup. It just needs to be taken out. So I would definitely be watching that one for tomorrow. Visa, thank you for bringing that up. Nicholas, could you go over the thing with the stop loss? Yep, got you there. I'm in reefer, but on right. Okay, so the chart that I pulled up is going to be the same anyway, right? Even if it's on a different exchange, it's not on the Frankfurt exchange or whatever, but the idea is the same. So hopefully that cleared that up for you. Daryl, hey, could you give your thoughts on LON? Okay, I'm pretty close to signing up. Oh, okay, cool. Oh, nice, nice. No problem, Daryl. All right. So LON, let's take a look here. Is LON, what is that? Is that a stock? Let's see. This, I'm guessing it's a stock. If I'm wrong here, I'm going to check the chat to make sure I got the right thing here. Yeah, Nicholas, so that reefer that I showed you, let me hold on a second. Let me just so I could show you RFR on the German stock exchange, on the Frankfurt stock exchange. I just want to show you it's the same chart. It's going to be the same chart. In either way, like managing the trade is going to be the same. Just show it real quick on FWB. Well, that's the chart on FWB. Is that right? That can't be right. Let me see. RFR. Hold on. Yeah, that's a chart that shows up on F. No wonder why you're so confused. Look at this chart. It's horrible. Okay, so again, you can't. Don't look at a chart that looks like this, right? But that's a light volume. I would definitely not trade with this, with the broker that you're trading with on this. Right. So the thing is, it's the same deal. It's the same deal. You have to just. I could see why you're confused. Okay, I can see why. You have to trail your stop basically. If this little tick today's tick is closed at 376. Okay, so I know I see you have no highs and lows to work with. So you're going to have to go back to your most recent candle, 314, and kind of put it there. Okay, but this is very difficult to work with because you have no candles here. All right, so I would let this thing work and just, I don't know what to tell you on this one. Because you're working with, there's no high, low, or close. All you're getting is a closing price. There's no open, high, or low. I mean, you have no candle to work with. So in this situation, yeah, you know what I would do in this situation? Just kind of take like an average. The thing is, if there's a big pullback, what you're going to get on this is you're just going to get a big red bar. It's going to look like that. Okay? So and it's going to knock you out probably at not the best price. So you're going to have to use your discretion on that one and just kind of trail your stop. Keep it, let's see, this thing is up 273 today, up 10 cents. I would just kind of find the best structure you can and just put your stop there. Okay? But like I said, you're in something with very low volume. It's going to be difficult to work with. All right, but hopefully the answer that I gave you before about reefer, just how it works with, I mean, the thing is, look, on the regular stock, right? Reefer on the regular exchange, right? On the US exchange, all right, which is, regular candles here, you could probably use this as a point of reference, okay? Kind of use this idea as a point of reference and see if you can just translate the highs and lows of these candles to the situation you're in on that German exchange. Because this can't deviate, I mean, the price can't deviate too much from the actual, from exchange to exchange. It really can't deviate too much. That's where arbitrageurs step in and they take advantage of all that. So it'll probably be similar, okay? That's what I would tell you on that one. All right, so thanks for that question. All right, so let me continue here. Man, I'm talking a lot. Let me continue here with these other questions. So Daryl, I'm sorry, Daryl. Let me go through this stuff here with Daryl. LON. Let me see. So Daryl Way on the London Stock Exchange. Okay. So hold on, Daryl. I'm going back to your original question. LON and Way. Oh, that's what you meant. Way is on the London Exchange. Okay. So Way. Let's take a look. LSE. Okay. Way Education. Okay. Got you. Here we go. So here's the thing. I see a bullish trend. Right, higher lows, higher highs. Okay, that's cool. Let's look at support and resistance levels. So when we see a bullish trend, I'm really only interested in supports, really, because resistances, what am I going to do at a resistance besides lock in profit? Right? I'm not going to short it. So, okay, I noted this resistance up in here, but I'm much more interested in supports because that's where buying opportunities are in a bullish trend. So 32. 32 is your, is this in British pounds? What is this? GB, yeah. And so 32 pounds would be your next support on this thing. That's where I'd be looking for the bullish reversal if you're not in it. Okay, it's pulling back. I would leave it alone, right? If you're not in it, I wouldn't touch this because you have a bearish candle, and it probably means this bearish momentum is likely to continue. So I'd wait for that support there. If you're in it, I don't know what price you're in it from. Hopefully you've locked in some profit along the way. Okay. Also, I don't know what your time frame is, but in these situations, now if you just bought it, for example, and you're in from the high, you probably should get out and take the loss because you don't know if it's going to hold that support or break lower, right? That's the problem when you get in from bad prices, and then you hope. So, and the situation can become very random, where you bought it at a bad price, you get shaken out, and then it goes higher, and it all starts with the bad price. So just something to keep in mind there. I hope that answers your question. I'm going to try to move a little faster here because I still have a lot to answer, and I would like to try to answer everyone's questions. AZN. I'm guessing that this is on the LSE also. So here, let's see. Does it give me the LSE? No, hold on. What was that again? AZN. Okay, I see the LSE on my list here. Okay, hold on a second. Let me pull that up here. Just give me a second. AZN. And London Stock Exchange. All right. So let's zoom out. What's going on here with this thing? Generally strong. All right. Let's look at some support and resistance levels. There was a support over here. There was a support. It was taken out, and it looks like it's testing it again. So while the bigger picture is, I would classify or categorize the bigger picture as bullish, because you have a broad higher low developing. Okay, that's a bullish structure. You're dealing with this resistance right now. So I wouldn't buy this here. This thing may pull back again. If you're going to buy it, at least let it clear the resistance and let it pull back or something. There'll be plenty of buying opportunities in something like this because this thing has been in a range for a while. I mean, look at the high of the range. Is it right there? Okay, so that's the high of the range. And you're struggling with this little minor resistance in the middle. I would leave this thing alone. There are many much better opportunities out there. Wait for a pullback on something like this. I mean, look, Visa looks better than this, right? Everything looks better than this. I'd wait for a pullback into this support here, if anything. Just be patient with that one, okay? If you're in it from a low price, this is a good place to get out of some because you're at a resistance and it's showing a little bit of hesitation there. All right, that's how I would deal with that one. Remember, prices move, they're highly random. And the more in the middle of a range they go, right? I would say that this is the middle of a range right here, right? This area. The more in the middle of the range they are, the more random they are. So anything can happen there, right? Just something to keep in mind. So thanks for bringing that one up, Daryl. And I hope you join up. If you have any other questions, come to our free chat room. Been sharing a lot of stuff in there. Hey, Jay, so let's see how CLSK. Yeah, I've been interested in Clean Spark. CLSK. I've been very interested in this one. Look at this. This is after that amazing move. I've been wanting to get back into this. The electric vehicle stocks have been a little tricky. You had that buying setup the other day, but look, it's kind of hesitating a bit here. So in this situation, I like Clean Spark, but it may test that low again of 24.25. So that would be one possibility. If it can do something like that, I would be open to buying if it gives us a setup, right, on a failed low situation. The other possible buying situation would be the breakout, this little breakout area, which would be 28.85. What's today's high is 29.31, and we close at 27. So you start pushing 29.25 again. You start pushing that may be the breakout, right? That you may get some follow through there. I would compensate with maybe taking a smaller position. Keep in mind, I'm talking about swing trades. For those of you that aren't sure, I'm not talking about investments here. So since that breakout isn't at the best price, that would be a good place to take a smaller position, even as a swing trade. Or you can wait for the failed low and see if the market delivers that and take a regular size position. I like this. I'm waiting for something like this. I want to, get involved in clean spark again. It's just maybe a little noisy here. The other thing we have to keep in mind is what if the whole market pulls back? We get that big pullback. These electric vehicle stocks, they've been on their own. A lot of them have been kind of doing their own thing, which I like to see. But if there's a really dramatic pullback, they may be affected a bit. So just have something to keep in the back of your mind. QS is another one. That's another one that's been on the radar. I like this location, okay? QuantumScape, look at this location. That's what I want to see Clean Spark do. All right, so you have the double bottom developing at 47 and a half, basically. And now today's candle is red, okay? You had the buy trigger, the buy signal on Friday, okay? And now it kind of turned into this red candle situation. So if you're not in this, why not wait? Why not wait until you take out the high of today's candle, which is what, 49.68? But this is definitely one, I like this one a lot. This might be a good options trade too, like buying 6-month options deep out of the money. This is a $47 stock, so maybe something like, $60 or $70 stock out of the money 6 months out. That usually if you get a cheap premium on something like that, that's like kind of like a Nikola type of situation. So I like that, but I definitely like this formation. I love the double bottom. It's a broad higher low. Broader trend is bullish. So I would wait for that break of that level. Risk can be defined by this low over here, 44.5. So you're risking about 4 or 5 points on something like this, but the potential is enormous. The potential is a lot more than 4 points. So I do like QuantumScape, definitely one for the radar. So we have Visa, we have QuantumScape, we have Clean Spark, quite a few swing trade candidates here. And then that was the other one that Abhishek mentioned before, which I can't even remember now. I have to go back to the chat. All right, Scott, what are your thoughts on GME? Pump by Wall Street. Okay, GME, let's see. Oh, wow. Okay, so herd mentality, right? Definitely I could see the herd mentality pump situation. Look at this. So this is a great example. This is what like Kodak did something like this back in the summertime. You got to stay away from these, right? This is a Robin Hood type of situation. Everyone piles in, no one knows what they're doing, right? And people who get caught up at these levels, they're stuck now and they're hoping, and this thing looks ugly. I would leave this thing alone until it stabilizes. There's nothing to do here. One candle is not enough to make a judgment on, especially when it looks like this. Let it stabilize, let it pull back into the $40 or $50 area. Something like, again, like take a look at QuantumScape, right? Perfect example. See how QuantumScape at one point looked very similar, right? The herd mentality nonsense. This is what you're looking at next, people. See all these red candles? That's what you're looking at next in something like this GME. So let it pull back, let it settle. It may take a month, but that's what I would do with that. Thank you for bringing this one up because I definitely want to keep this one on the radar. There could be a lot of potential in those after they pull back. Okay. Pump by, yeah, okay. So I could see why they pump. They pump and they unload onto all the people that don't know what they're doing. That's very typical, just a lot faster. INTT and EOS. Okay, let's see. INTT. Jay's been coming up with some good ones. Okay, INTT. Well, what I don't like about INTT is the sporadic price action. If I got the right stock here, this is usually, is that right? Usually it's a sign of low volume. So not too crazy about that, and it's on a high. So, okay. I don't know, again, if that's the right one. Let's take out EOSE. Okay, that's a nice pullback. Energy, right? EOS Energy. Now, again, herd mentality situation previously. This is what you want to wait for after the herd mentality gets caught. Because who do you think is banging this out? Who do you think is selling all this? Do you think it's professional traders? And yeah, there may be some professionals that may be nimble enough to short that. But this is mostly people who don't know what they're doing, banging it out or getting margined out of their positions. You got a lower high right there. So great location right here at $21. You have no price action to support you though. So yeah, I would definitely be watching this level. So you have trend, you have a level. You don't have a setup. So definitely one for the radar. I'd wait for an inside bar or a pin bar, and that may be a long. It may take some time for this one to settle. Today's candle closed very bearish, so I wouldn't be in a hurry on this one. Let it settle. But you do have a potential double bottom. okay, here. So I definitely like definitely a good one for the radar. Thank you. So let me see what else we got here. Okay, hey, traveling. Cool. Hey, oh, from Rome. That's right. Nice, nice. Cool. Rome's a nice place. Okay. Dot. Yeah, so Isaac, we checked out Dot earlier. I'll take a quick look again, but I mentioned it earlier as part of my analysis. Like I was telling people, because we have a trade on this one. And I told people, I would hold on to it until it goes to the stop. It stops at 14. Here, let me go here so I can show you. I think it's on my Binance. No. So it's on my, Bitfinex, right? Okay, so the stop's at 14. I would let it just either let the market decide, okay? I have targets, you could see 23.5, 28.5. And if Bitcoin can put a rally together, this thing can go. The choice that I gave people was, if you don't like that idea of going to a stop at 14, then get out now, take your small loss, because you have a failed high situation and a potential sell signal developing. Doesn't mean it will sell off, does not guarantee it will go to 14, but if you don't like that risk, get out now. Okay, you have an opportunity to reduce your risk even further by getting out now. All right, am I still bullish on DOT? Sure. Okay, it's bullish structure and you're in a consolidation. So that's my take on that. Okay, hey, 15, Nick, nice to see you. Anna, general question, what is the overall plan in case we face the bigger pullback? More than 30% on the average in the stock market. It's reasonable to close swing trades and bad performers and start shorting. All right, that's a good question, Anna. Let's go back to the stock market real quick, SPX, USD. And let me just see how I'm doing with time here. Oof. All right, I'm gonna wrap this up here in the next few minutes. Wow, I got so much chat and so many questions. I'm not going to be able to answer everyone's questions. I'm sorry. I got to wrap this up. But okay, so Anna, to answer your question about the pullback. I mean, look how the S&P closed today. So we started out kind of all over the place, and now we have this bullish pin bar on the S&P, right? So this is not the best location for a bullish pin bar to develop, but the thing is, there's still strength in there. So you have to prepare. Since we're near a high, then we're not. There's nothing wrong with still taking longs in this environment like we've been doing. But at the same time, we're open to shorts and doing shorts in a structured and risk-controlled way, right? That's why we have UVXY. We bought calls. Our maximum risk is the premium of those calls. If we're wrong and the S&P just continues higher and higher and higher, we lose our premium and that's it. We're not caught short. Okay, like a lot of people, they get caught short. They short the futures, they short the CFDs, they short the Qs, they short this, they short that, and the market just keeps going higher and higher and higher. At this moment, there's no signal to go short. So it's still a little early, right? So one way to compensate, again, if you want to get in a little early, is to use options, buy yourself enough time. And, if we don't get the sell-off in the next couple of weeks, then it will be time to roll over those options into the next period, which we have to figure out what that is. But you don't want to get too aggressive with the shorts here yet. Like I would take a small position, like we have with the UVXY, and see how that goes. Common mistake is people get married to an opinion, and they're like, oh yeah, we're going to see a 30% pullback. Yeah, definitely. So let's get out of all our longs and let's just get short. That's an opinion, and the market may not agree with that. So like I said, we're taking swing trade longs. We're taking profits. As you can see, Andrew's been sending out a lot of trims and a lot of exiting, like exited Facebook inventory and have exited a bunch of other ones. Take your profits while you can. New buy signals that show up, hey, take them, see what they can do. But you have to just be prepared if the sell-off occurs and we have a bunch of positions on, well, our risk is defined and our size is in proportion. So yeah, we'll lose a couple of percent, right? We'll lose some on here and there if they get knocked out, but we're not going to get caught in anything, okay? And plus we're building a short. Like I said, we have the short in UVXY, which the calls act as a short. And there could be other opportunities that develop with the SPY and all that kind of stuff where you can buy puts or whatever, but we're just not there yet. If you want to buy some early puts now, that's one way to do it, right? You buy one put and the market goes higher, buy another put, but you need to buy a lot of time, okay? And deep out of the money so that they're cheaper, all right? Like you need probably, I'd say at least 3 months at this point. And it's good to do it at the peak because, you're getting the cheapest prices. But like I said, I hope that answers your question. It's it's not a bad idea to close bad performers, and it's not a bad idea to take your profits on swing trades if they're not performing that great. You just want to be in a position to where if the market has that pullback overnight or something, it starts overnight, you're not caught in a weak position. Okay. Hey Arno. Okay. So also, can I take a look at AMC? Oh yeah, this was one of DJ's suggestions, and I'm really upset that I didn't take this. We were talking about this. I remember, and someone else brought up like another movie theater chain. It's like, hey, we don't care about the fundamentals of these stupid things. Look at this. What an amazing trade. It's up 90 cents today. This was one of DJ's calls, okay? And it was based on the double bottom situation. He called it back here when it looked like garbage. And I liked it, but I just, had too much going on, and I forgot. I forgot to take this position. Look at this thing. So you should be taking profits now, right? You don't want to be chasing this. This is what we wanted it to do. And you're there. I mean, look, you're basically at the $5 calls. So, wow, yeah, very nice. Nice, and that was a nice move, taking that. Great call by DJ. So, yeah, I would just take profits on that, lock something in, okay, and then see where it goes from there. Now, let's say POW. Okay, PSTG, long signal, okay, and PAM. Take this inside bar trade. Okay, let's take a look at those real quick. Let me just see how many other questions I have. Okay. Okay, let me see. Nicola, Dimitri, yeah, I have a lot of questions here. Abhishek, yeah, I won't be able to get to that. Dot, okay, I mentioned Dot. Dot, yeah, the buy stop for Dot. Pepe, hey Pepe, hold on, I'm just running through the chat here real quick. What do you think AXS of the VBLD? Okay, Salesforce, okay. I know your take on Nokia. All right, let me see. Yeah, wow, I got a lot of questions. Man, yeah, I'm not going to be able to answer all these. So let me see how we're doing with the time here. 1:32. Yeah, I'm going to wrap this up in the next couple of minutes. So, Pal, I'm going to get to yours, and then I'm going to wrap this up. For those of you that I missed your question, here you can do two things. Come to our free chat room, ask the question in there, and I'll get to it when I can. Or if you want, another thing you can do is save your question for Talking Markets tomorrow at 4 p.m. when we do Talking Markets, because Andrew will be on and he can answer it as well. Or you could wait till Thursday when I do my next stream. Okay, so sorry about that. I apologize. I can't. I'll be talking all day if I keep going here, and I'm already over. So PSTG. All right, Pure Storage. Oh yeah, this is one of Andrew's favorites. Talked about this a lot of times. You have this consolidation right here. Bullish trend, consolidation. This is basically a higher low situation, continuation pattern. I like it. So long signal out of the bullish consolidation. Yeah, and I look at this pin bar. Beautiful pin bar today. So I would be open to this POW. 23, and I like the price too. They're at 23.5. So 23.5 is taken out, and your risk is defined at 22.30, basically 22.25. $1.50 risk, and this thing breaks out of that consolidation. You're probably looking at $25 or $26 a share, something like that. I mean, clearly, there's no question this thing's strong. Okay, so I like that. Definitely, I agree with that one. Now, when there's so many, this is like the fourth nice setup that people have mentioned here today. I can't remember them all. Okay, thank you. PSTG, I like it. Definitely a long candidate. PAM. All right, so PAM looks like another energy stock. Failed low. Okay, definitely bullish structure. And what is he saying here? Take inside bar trade for bottom reversal to new bullish trend. Okay, I see the inside bar. So you have a failed low. Yeah, you have a correction of that bullish movement that dates back to October there. Yeah, this is, I like the PSTG trade much better because you have a consolidation, clear cut, higher low. This isn't bad, it's just more aggressive. So the low here is what? Let's see, what's the low? 12. So basically 12.25 would be your risk. And you need to take out this level here, 13.30. So if it takes out the high, so 12.57 is your high. So you're not looking at a lot of risk. So I'd give it maybe 50 cents of risk, give it a little extra room. 50 cents of risk if you take out the high. And then, this thing over the next few weeks, I wouldn't be surprised if it could take out that 13.25 high, and this thing can run into the 14s back in to test this high over here. That's within reason, especially for like 50 cents of risk. That's not bad. Okay, so I like the idea. I would just classify this one as more aggressive because you're still dealing with the bearish momentum relative to that PSTG. So thank you for bringing that up, pal. All right, so I'm going to wrap it up there. Everyone, again, thank you all for your great questions. I have to wrap this up. So like I said, everyone, come to the free chat room and ask the question there, or just ask in the Talking Markets tomorrow. Thank you all for your great questions and great participation. It's always enjoyable to see the participation, and I'm happy to help everyone. Okay, so thank you all again, and I will see you next time. Remember, Talking Markets with Mark and Andrew is at 4 p.m. Eastern tomorrow. Join us for that, okay? Come to greenbridgeinvesting.com, sign up for a free chat or free membership, and you get Trade of the Week, which we mentioned tomorrow as well. And don't be surprised to see one of these charts that we went over today show up as Trade of the Week. All right, everyone, enjoy the rest of your day. Thank you. Thank you again for watching.